Welcome back, folks. Today I'm going to be talking about Nasdaq covered call ETFs. I've got a list of 7 here that I'm going to evaluate on things like their yield, how the dividends are taxed, expense ratios, and their returns. I'm going to compare them all together, and at the end of the video, rank each one. So without further ado, let's reveal the yield. And the taxability on these ETFs and their dividends. And we've got QQQ up at the top. And the first covered call ETF on our list is GPIQ by Goldman Sachs. It's got the lowest yield at 9.89%, and that yield is taxed as return of capital. So that is a good thing because it means at least until you get all your capital back, it's tax-free. The next ETF on the list is QYLD by Global X. It yields 11.5%. QYLD is probably the oldest one on this list, and the mechanics of how it works is different from these other covered call ETFs. Its taxability is also different. It's return of capital plus investment income. And if you don't believe me on that, I went to their website. I got this huge file from them where they talk about their year-end tax supplement. I searched up QYLD. They listed all their distributions here, the sum of them here. And so if you see their distributions in these columns, these first 3, you'll see some of its short-term cap gain, some of its dividend income. So it's not return of capital, and it's not taxed as favorably as some of these other funds. Next is JEPQ, the JP Morgan Nasdaq covered call. That one is 11.5% as well, and it's taxed as ordinary income. You can check it out here. JEPQ. And after that, we move on to ProShares IQQQ. They have a yield of 13.33%, and that is return of capital. You can go to their website and see their yield, 13.33 right now, and their Form 19A-1. You see some of it's considered return of capital, and some of it is investment income. So they're a hybrid there. So I'll actually correct that. And then there's QQQI, which has 14.56% yield. So it's getting higher. And this one is by NEOS. And where did I put them? QQQI. So highly tax efficient, mainly due to the use of Section 1256 index options. So that's return of capital. Although it says here taxed at favorable long-term capital gains rates, what's really going on is that, let's say you have $10 of QQQI. The first $10 that they distribute will be return of capital, and the next $10 will be long-term cap gains. Of course, none of that is actually tax advice. That's just my understanding of how it works. Then there's QDTE and QQQY. These funds are structured a bit differently than the rest of them. That's why they have a higher yield. They are doing options pretty much on the daily. But from Roundhill QDTE, they pay weekly. And if you look at their 19A notice, return of capital there, and they're paying 35%. Then there's QQQY from Defiance, paying almost 40%. They're a mixture of ordinary income and qualified dividends. And you can see that here, return of capital there and net investment income there for QQQY. And like I said, those two do have a bit of a different strategy. They're using very short-term options every day, and then they come up with a weekly payout. So next we'll look at the expense ratio and market cap of each of these. So the lowest expense ratio is GPIQ and JEPQ with 35 basis points. The highest one is Defiance at 1%. And then you get QYLD at 68, QQI at 68. IQQQ had 55 basis points, and then QDTE almost 1% there. As far as market cap, the size of the fund, the smallest was also Defiance. The largest was JEPQ with 29 billion. What was surprising was that Goldman wasn't larger. It was interesting to see that QQQI, which is a fairly new fund, was much larger than Goldman. QYLD, which has been around for a while, and I think I could be wrong, but I think it's actually shrinking in A, was 8.4 billion. But JP Morgan by far the largest. And then these guys weren't quite in the billion, or this guy wasn't quite in the $1 billion. Roundhill didn't quite make the $1 billion club. And IQQ and QQQY, they are definitely the smallest ones, the babies there. Now we will look at what we all want to talk about, which are the returns. And these I've pulled from TradingView. I've also labeled their strategy here because some of these are more income focused and some are more growth focused. So let's look at their year-to-date return. And you'll see QYLD, and we can go back to TradingView. QYLD, this one, oh, I already had there. QYLD should have the lowest return. This is year-to-date. Yep, they're at down 98. Even when you adjust for dividends, when you don't adjust for dividends, they're down even more. And you can see that the one with the best return was QQQI from NEOS. We can pull that one up here and contrast them. And NEOS, when you don't adjust for dividends, was slightly on the positive, but when you do, for that 14% yield, they were getting around 10 point, almost 11% return year to date. Now, the 1 year return, who won on that? It was, again, NEOS. The one that lost was, again, QYLD. Honorable mentions, Goldman had a great return there, 20%. They weren't far behind NEOS either. Roundhill, just with this 35% yield, was doing well. A lot of their returns came from the yield. We can look at Roundhill. QDTE. And yeah, Roundhill QDTE. This is, we'll do 1 year. 18% when you account for dividends. When you remove it and you just look at the price, Roundhill is actually down 16%. So Roundhill, a lot of their return driven by those dividends. And that's why it's more of an income product. I also labeled QQQY an income product because it's mainly focused on paying you that weekly distribution. We can look at that too. Y. And you'll see, yeah, they are extremely down. So I wouldn't call anything that goes down 36% in 1 year something that is growth focused. But if you adjust for dividends, or I suppose if you were reinvesting the dividends, you get a little bit more of a return there. And QYLD just wasn't doing any of that, wasn't growing, wasn't paying the most dividends. So I'm calling it an income product. And of course, the one that did the best out of everything was QQQ, although it's not paying, it's only paying 0.5% in yield. And we're really evaluating Nasdaq covered call ETFs for their income. So how did I rank these? So you'll see that I've got a few numbers on the board. In the income bucket, so the income strategy, I gave Roundhill the top slot. I gave QYLD the very bottom slot. Roundhill got the top slot because it had large A, which is something you want to see. The taxability of the dividends was also very favorable as return of capital, and the 35% yield was solid. QYLD just came in last because they were the only one that had a negative year-to-date return. Their 1 year return wasn't great, and the taxability is not great either. Let me sort this better. Oops. Let me filter this for growth plus income and sort it A to Z. Now for the growth plus income bucket, NEOS came in first place. They had a solid market cap, lots of liquidity there, a 14.56% yield, and they had a solid 1 year return, solid year-to-date return too. So I really like this fund. It also got ETF of the year. It does have a higher expense ratio than Goldman, but that's more than made up for in the yield. Goldman was surprising that it came in second. Goldman was paying the smallest yield, but they had good growth. And let's actually look at Goldman by itself, or we can look at Goldman against QQQI. If you look at both of these their 1-year chart, they're very close when you adjust for dividends. But when you don't, and when you just look at relative NAV stability, Goldman did pretty well at 8%. And let's overlay the actual Nasdaq just for reference. Actual Nasdaq, 20% there. So Goldman was missing it by 12%, but all three of the guys tracking pretty well in the 20% range. And then ProShares, they're a bit different. They actually don't do options. They do like swaps. They didn't rank as high. You see their year-to-date return. They weren't capturing as much upside from the Nasdaq there. Same with JEPQ. They just were not capturing as much upside either. Plus, they're taxed at ordinary income, so that's not great. Now, I think QQQI definitely stands out here because of the higher yield over Goldman. You know, about 3% more, maybe 4% more. So that's why Goldman ranked second. But let me know what you guys think. How would you have ranked these? Which ones do you own? And be sure to check out more videos on my channel where I go over the S&P 500 version of these. I also talk about things that yield much higher than all of these, like ULTI or YMAX. And yeah, thanks for watching and hope to see you in the next video. Take care.